Good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX with your European session outlook. We'll start with the retail sales month on month from the US, 0.4% worse than expected at 0%. Retail control, 0.3% worse than expected at 0%. And retail sales ex autos month on month, 0.5% worse than expected at negative 0.3%. Conditions are extraordinarily quiet across the financial market, and the dollar is certainly not escaping these conditions. While the US dollar's activity level measured by the average true range is higher than many of its FX counterparts, it is still in a constricted range. There are two general themes that are consistently market moving for the US dollar: risk trends and shifting rate speculation. There is definitely more potential for volatility on the latter topic amid inflation data and central bank updates. For the dollar, the more likely fundamental motivation would come from a shift in interest rate forecasts. Only a few comments from Fed officials were heard this past week. San Francisco Fed President John Williams offered an upbeat assessment and kept the 2016 timeframe in the realm of possibility, but Fed fund futures show the markets remain skeptical, with a 42% probability of a hike by December. The US CPI figures this Wednesday should give a serious clue and should fill in the entire picture of recent economic US data. The Dow Jones ended 5 points down Friday. Nasdaq was sideways. Dixie is at 95.72. Biggest movers were USD JPY, 55 pips down, and that's all. We have an event today, the NAHB Housing Market Index. We'll be waiting on that. And then for the week, on Wednesday, we'll have the FOMC minutes, and in Canada on Friday, CPI data. All right, onto the EU markets. The eurozone economy lost steam in the second quarter. A fresh estimate confirmed on Friday a slowdown that will strengthen expectations that the European Central Bank will extend its stimulus efforts later this year. The European Union's official statistics agency said the economy grew 0.3% in the quarter from April through June, a slower pace than the 0.6% pace it showed in the first quarter. The eurozone expanded 1.6% compared with the second quarter a year earlier, Eurostat said. Data show Germany expanded 0.4%, but France and Italy didn't grow at all. Spain's economy grew 0.7%. This week's most important events will be the CPI data on Thursday, as well as the ECB monetary policy meeting accounts. On to the UK, the sterling closed the week as the world's worst performing currency as the Bank of England stimulus package kicked in. The sterling lost 1.2% versus the US dollar in the previous week and 1.9% versus the euro. And the week ahead offers no reason for optimism towards the pound's performance, with economic earnings and unemployment data expected to show further contraction of the economy. The FTSE 100 closed at 68.96 on Friday. The biggest movers were the GBP JPY, 115 pips down on Friday, 215 pips range, and GBP Canadian dollar, 110 pips down on Friday, 155 pips range. The events for this week are CPI and core CPI year-on-year and month-on-month, PPI month-on-month and year-on-year, PPI core output month-on-month and year-on-year, retail sales month-on-month and year-on-year, as well as the ex-fuel data, and public sector net borrowing. Onto the Asian and Pacific markets, we had Chinese foreign direct investment year-to-date declined to 4.3% versus 5.1% previously. Japanese industrial production year-on-year 0.4% better than previous, and Japanese month-on-month is 0.4% better than previous at 2.3%. Japan's economy minister Nobuteru Ishihara said on Monday the economy is showing some weakness but continues to recover moderately as a trend. Japan's economy is likely to achieve a recovery driven by private demand, though the government must be mindful of risks such as slowing emerging market growth and uncertainty over the fate of Britain's exit from the EU, Ishihara said in a statement issued after the release of April-June GDP data this morning. This week's events on Wednesday, we're going to have New Zealand PPI and employment. Thursday, we'll have Japanese merchandise trade balance, also imports, exports, and Australian employment data. All right, commodities. Baker Hughes oil rig count. The number of rigs drilling for oil in the US last week increased by 15 to 396, the 7th consecutive weekly rise and the 10th increase in 11 weeks. Gold prices ended Friday's session in the red after spending most of the day in positive territory. For the week, gold dipped $1.20. Oil futures soared for the second day in a row on Friday, ending at a 3-week high as investors continued to cover short positions after Saudi Arabia's oil minister hinted that the kingdom could be open to discussions next month aimed at stabilizing the market. Crude futures gained in Asia early today in the morning as sentiment carried over from last week on prospects for OPEC to curb or stabilize production. S&P 500 index had a range of 9 points at 2183 now. Gold had a range of $23 at 1339 now. Silver had a range of 57 cents at 1977 now. Crude oil had $1.40 range up to 44.68 now. And natural gas is trading at $2.54 at the moment with a range of 10 cents. And that was all for today. Thank you for the attention. I'll see you next time. Goodbye.